All right, welcome everyone. We're gonna kick things off today. Welcome to everyone who's joining online. I know we've got Yuri, we've got Rizwan. Welcome everyone. Again, if you're watching online, drop it in the chat where you're joining us from, who you are, so we can chat with you guys throughout the night. And thank you everyone who's come out live tonight. We've got a pretty awesome lineup of speakers for you guys that I think is going to be super impactful for many of you. And this is our last meeting of 2024, if you can believe it already. Like, the year is basically done. So we hope that we have some amazing speakers that are going to really impact you, get you motivated, because 2025, I think there's going to be some opportunities for investors out there, so you got to be prepared for it. And to do that, we're going to start diving right in. Again, Investors Performance Group is brought to you by the Kelly Fry team. We are a full-service, investment-focused team, helping you guys build your wealth in real estate. We've got access to all the vendors you need, from home inspectors to property managers to lawyers, accountants, anyone you need to help build up your portfolios and build up your wealth. We are your one-stop shop. And today is sponsored by Greater Vancouver Tenant and Property Management. So Keaton is here in the crowd. Give him a round of applause. He bought all of your food tonight. Those of you guys who are online, that's what you're missing out by not coming in person. But we really appreciate the sponsorship. It obviously helps out, feeds everyone, gives them wine, gives them drinks, and we'll kick things off. So we have got a jam-packed night tonight. We're going to start with the market update, talk about what's going on, and it's always funny. When I start these meetings, or before I start it, everyone always comes to me and they know I'm going to cover this. And the first thing they say is, "How's the market doing, Cameron?" Literally 4 of you guys said the same thing. I'm like, you're taking my thunder away. Then we've got our first guest speaker, Derek Peever of Peever Conn Group of Companies, talking about the corporate housing situation. What's going on there, especially since we just had massive changes when it comes to short-term rentals, and how he's navigating that and how he's dealing with it with his type of, what he does with his types of properties. Then we do indeed have a Tales from the Trenches this month. I know for those of you guys who've been returning the last couple of months, we're like, what's going on? They don't have any more tales. Well, there's always a goof up out there, and I want you guys to be able to learn from the goof up. This time I'm covering that goof up. And then we've got our keynote speaker, who is Keaton Bessey of the Greater Vancouver Tenant and Property Management. He is going to be talking to us about some very important things that we need to know as landlords here in British Columbia. There's been a lot that have changed on that side too. It's not just the short-term rentals. Things such as evicting tenants, what the new rules are. Did you guys know that there's a portal that you now have to submit all of your evictions through? He's going to cover that as well, and a lot more market updates, everything. So we're really excited to have him out. And then literally, I don't know how we keep doing this, but right hot off the press, we got a deal in our inbox today, so we're going to be covering that project today. So let's kick things off. We, of course, encourage you guys to participate with us. If you guys are getting good ahas, take your photos, videos, post it, tag us at Kelly Fry Team. We love the audience engagement. And obviously, if you have any suggestions for us too, send us DMs on what you'd like to see during these meetings, and we'll do what we can to bring that for you guys. Now, many of you guys, when you first came in, noticed something a little different about me today. That's right. It's Movember. And to drive Kelly crazy a little bit, the style here is the horseshoe or the what's the other word? There's horseshoe is kind of the technical term, but the handlebar. You know, interesting enough, the handlebar is actually the one that comes out here. I learned that when I was researching what style to wear. So I put it out to my Instagram. They chose the style, but I am not just growing the mustache for Movember. We are raising funds. For those of you guys who remember last year when I did it, this is my uncle, Terrence Gullickson. Terrence passed away 2 years ago due to cancer. He was a fighter. It not just dealt with one type of cancer. He actually had 3 different types of cancers throughout his years. Everything from prostate and all the typical stuff that men could go through, which finally led him to his final one. You know, just years and years and years of chemo led to him getting bone cancer. And unfortunately, when you get bone cancer, it's really hard to recover from that. And it just basically makes your body so weak. And I say it's the cancer, but he took a fall, and because his bones were so brittle, literally just everything shut down from there. So what we're doing today is 50% of the door fee that you guys paid to get in, we are donating that to the Movember Foundation. And of course, if anyone would like to help me raise money, you can scan this QR code right now. We've raised $730 of our target of $3,000. So any donation helps just get us closer to that fund. So leave that up there for a split second. And if you guys are interested, help me reach that target of 3,000 bucks. I'll bring it up again later if you're interested. That was me last year. Pretty suave looking dude with that mustache. This year it's definitely a different look. So let's see what this looks like by the end of the month. All right, let's talk about it. What's going on in the market? What you all want to know, because you guys ask me. Well, I got some good news this month. First time in a while. Now, when I say I've got some good news when it comes to the market, I don't want everyone to get confused that suddenly the market is completely turned around. A little bit of good news needs to be tracked and followed and make sure that this becomes a trend. So the last several months that we talked about it, inventory was significantly on the rise, right? We went from basically, throughout the springtime into September with a massive, you looked at the charts and it looked like it took off like a rocket. And when you have a lot of inventory hitting the market, and sales were actually going the opposite direction. We had a kind of an increase during the springtime, but then it fell off a cliff throughout summer into the fall. So when you have rising inventory and falling sales, it's going to put pressure on prices. And we did see that as we reported prices were starting to definitely come down. And honestly, at one point we're at Greater Vancouver was 14,500 listings, and years prior it was maybe around 6,000 to 8,000 depending on what time of the year it was. So that's a huge jump. And sales were as low as 1,800 in the month of September. So when you have 14,000 listings and only 1,800 sales, well, we're definitely deep into a buyer's market. Now, we had a couple of things happen. One, we had a 0.5% interest rate drop. And I said it on my podcast, if you guys are following it, Manning Up on Real Estate, there's always a lag time whenever the government makes any sort of announcement. It's not going to happen immediately. Literally, I have clients calling me, okay, rates just dropped. How many calls did we get? None. Because things do take time, right? Suddenly a buyer might get excited, oh, rates are coming down, maybe it's time to go buy. I got to line up, talk to my mortgage broker, get myself pre-qualified, find a realtor, get into the market, start looking, spend 3 months looking for a property, and then finally put an offer on one because there's too much selection, right? So there's always a bit of a lag time. However, we are seeing now that September rate drop has started impacting the market. Hopefully December brings another one. Let's dive into it. So housing market sales increased for the first time in 5 months following a sizable interest rate cut. So when we take a look at the graphs here, we're looking at 3 main markets right now: Greater Vancouver, Fraser Valley, and Chilliwack. So as you can see here, a slight decline in inventory. That's the first bit of good news. Now, this is not a sharp decline, because I would say we have to watch it for about 2 to 3 months to see if that trend continues. If we see November, I should say, it spikes back up, well, we're not really going to be in that down period where things are going to go off. Now, keep that in mind. We are getting into what month soon? December. And what happens in December? Christmas. So I do anticipate we're going to see inventory start to come down because we're heading into the Christmas months. Those people who don't want to be hassled with showing their homes, they want to decorate, they want to have their family, they're going to see properties, they're going to take their properties off the market. And what are they going to wait for? Spring. The spring. Because we all say that, right? I'm going to wait till the spring market because I heard that's the best time to sell. And when we all think like that, what's going to happen in the springtime? We're going to exactly, right? We're going to have a massive spike in inventory. So as buyers, we have to think about that. There's going to be some inventory drop off. We probably want to get in, as sellers, I should say. As buyers, we like it when there's lots of inventory. When we're sellers, we're thinking about offloading any properties. We want to maybe start to think about, while we see the inventory decline, maybe getting it on the market, because there are still serious buyers that come through in November and December. People who just found out they're doing a job transfer and they're going to be starting their new job at the beginning of the year. Well, they have to get in and buy something in December, so they've lined it up, right? There's people who are, maybe they just found out that, they're right now, maybe their mortgage is being called. They have to get out, they have to sell. So there's going to be buyers out there. Lots of people are still coming into the country. So again, we're going to watch this over the next several months. If that trend continues downwards, we're going to get more into a seller's market. If we see it spike back up, we'll be back in a buyer's. But the good news comes from, and this is where, Rainer, you would ask me, I heard sales went up. 20%. We did see sales go up. So this is where we were down about that 1,800 sales in September. And can you guys see that okay over there? I'm going to swing that maybe a little bit more that way. We can see there was a big spike, especially in Greater Vancouver, little spike here in Fraser Valley, and honestly, Chilliwack's been just steady Eddie out there. So we have seen sales increase. This is in the wake of the 0.5% rate drop. So it did spur some buyers on. We are seeing more activity. Again, I like to watch that over a couple of months, right? So while we see this, it doesn't mean that that's going to continue, because a lot of buyers might also say, I've heard buying a home is a good time in spring. So that's where sometimes some of our best deals actually come in December. We'll have to see what this looks like at the end of the month. But what's the impact overall on pricing? That's what everyone wants to know. And as of right now, because we've had such pressure on the market for several months, month after month after month, we have still seen prices slightly decline, except for the Chilliwack market. Again, remember, Chilliwack's steady Eddie, right? There's 200 sales there out of 800 listings. So we have seen a downward pressure still on the prices. And you'll kind of see what's interesting, though, is when we go into the market segments, like breaking it up segment by segment, some markets are up, some markets are down. And I've said it before, I'll say it again because I think it's worth repeating. We don't have a Canadian real estate market, first of all, but we don't actually have a Greater Vancouver or a Fraser Valley market. We have multiple sub-markets. So when we look at this overall, that's a generalization. That's kind of just giving us an overview of what's happening. But at the same token, when you're looking at your investment strategy and which cities you're picking and which investment class you're picking, you have to go deep into the micros of those markets. And that's what we're going to do here right now. So Chilliwack, let's start out east, work our way closer to Vancouver. We can actually see here that over last year, we've actually seen some growth. And you actually saw that steady Eddie Chilliwack, right? Just kind of bobbing along there, listings staying stable, sales staying stable. It's actually pushed property values up a little bit over last year to just under $1 million. Listings have actually dropped. Okay, so as a seller, that's what you want to see. Days on market, pretty average. Townhouses up very slightly. Inventory up to 67 days on market. Takes about a month to sell a townhouse out there. And condos are up 15.2%. Their inventory is definitely up, and their days on market is up. But again, they've had some growth over last year. So we're diving down deep. And again, when we talk about micro markets, this even dives, you can go deeper on this, right? Are we talking new condos versus old condos? Are we talking 2 bedrooms versus 1 bedrooms, townhouses, 3 bedrooms or 4 bedrooms, right? Detached, do they have suites? Like, how old are the property? Abbotsford, it's fared okay. Townhouses are down just very slightly, 3.6%. The Abbotsford market detached is up 5.2%. Inventory is up across the board and significantly up in the condo and the townhouse market. So if we continue to see that inventory increase in those areas, we might see more downward pressure on some of those prices over time if there's not enough sales that come in to absorb that. Mission's fared well on the detached, up near 9.1%. Townhouses down 8.3%. Condos up 12%. I always say, though, with the Mission market, you got to take little bits of a grain of salt with it, just because when you're taking a cross section of 38 listings, it's not a lot of data to really formulate from, right? And that's actually down 19%. But they are starting to get more attached properties coming in, more townhouse developments, more condo developments. And as those continue to complete and get resold, we're going to see those inventory levels start to rise, which is well overdue. Like the Mission market was, for a while, when I used to do these reports 5 years ago, it used to be, oh, the Mission condos are up 150%, but last month was 1 listing and this month was 3. So we've seen the impact of the densification start to happen in the city of Mission. Langley took it on the chin a little bit. I remember reporting Langley detached over 1.7 at one point. Now it's just under 1.6. Their inventory level is up. It's adding days on market. It's about a month to sell if you price it right. Townhouses down slightly. It's pretty average. And the condo market's actually showing a little bit of a gain right now, but you can see a huge jump in the inventory there as well, taking longer to sell. Definitely notice this with our listings too. We've got a few listings in the Langley market. They are not getting as much attention as we normally would get in that market. That market used to be the hot one. A lot of people were moving there. Now suddenly we're seeing there's a lot of competition for buyers' eyes. Maple Ridge, up 5.1. Townhouses 5.7, condos pretty stable. Inventory up, big up on townhouses, down a little bit on the condos. One thing I'll point out about the Langley and the Maple Ridge market, and I know I mention this often, but for those who are listening for the first time, those two markets are doing a lot when it comes to development right now. And so you go down to Langley, there's always new condos that are being developed. One thing to note with these listings is those include people who bought a pre-construction and then, dumped it onto the market. And then the property is complete, those listings come off the market, some go back on. Maple Ridge is starting to experience that too. Our team alone this year, how many have we closed now? We've closed Podium, Thomas, Edges coming up, Inspire. So there's lots of projects right now that are being built and closing. And right now, a lot of them, it's not uncommon to see 20 to 30 listings in one building, especially if they were bought in 2022 and 2023 when interest rates were low. People are trying to dump their properties, which then spikes the inventory. Okay, so that's one where you'll see a lot of fluctuation throughout the months as projects close, come down. People either are forced to close on them and rent them, some will resell them. So you'll watch that change regularly. Surrey market down very slightly. We're up on the inventory and days on market's up a quarter. Downtown houses up very slightly. So condos have stayed relatively stable, but they are up 60%. So keep an eye on that. Same thing with Surrey. We've got some projects, same thing. Not a lot of movement on the assignments. So if you are thinking about buying a pre-construction, buying an investment property, I really think assignments right now are where some really good opportunities are, because there are people, one of our clients alone just took a $30,000 loss on his deposit. It was a $60,000 deposit. He could not get a mortgage, absolutely could not. So his only option was to say, hey, I just want out. Just get me out of this, I'll take the loss, which means really good buying opportunities for investors right now who are savvy and you're looking for those opportunities. And two, you're actually helping people out, right? Because if they don't sell and recoup some of their cost, well, they lose 100% of that deposit. So you're actually doing them a service as well as doing yourself a service by getting a great buy. Okay, and we look over to the Vancouver market. Prices are down 6.3%. It was interesting for a long time. Vancouver stayed pretty stable, especially Vancouver East, while we were seeing those interest rates start to rise. It's finally put its pressure on there, and they're down a little bit. Still over $2 million as an average, though. Inventory's on the rise. Days on market up 85.7% over last year, which means properties were still selling pretty quick last year. If we're now taking 39 days, and that's up 85. Townhouses are up, and condos just basically leveled down just almost 1%. Inventory is on the rise across the board. So that is the market stats. And again, delivering a little bit of good news, right? Inventory dropped, sales are up, but it's too early to tell the long-term effects of this. So we have to watch this over the months. However, as savvy investors, when you're analyzing these market trends, you have to look for those opportunities where you say, okay, it makes sense. There's enough inventory. More buyers are starting to get into the market. I don't want to be buying it 6 months later when the sales numbers are like this, because what's going to happen then? What's going to happen to prices, right? It's going to go up. So you want to make sure you're buying it while the prices are still showing low, sales activity is going up, and inventory is going down, and look for the opportunities. However, at the end of the day, it doesn't matter what market you buy in, it depends on the numbers of your buy, right? That's the most important thing. Buying it. Great stuff and valuable insight, because he's an active investor like many of us in the market. So he's always out there in the field. Now, we're going to move on to our next segment here. This is Tales from the Trenches. Now, Tales from the Trenches is a segment that we introduced 8 years ago now, if we can believe it. And the goal behind Tales from the Trenches is that when you go to any meetup or any seminar or anything, they're always teaching about how amazing real estate is, how much money you can make in real estate. And then you go, you buy that first investment property, and then you get the 12 a.m. call from the tenant that they plugged a toilet or something like that, right? So the goal here behind Tales from the Trenches, we do show you the other side of investing. So you can either, one, learn from someone else's mistakes so you can completely avoid these situations, or two, you can at least learn how to handle it so it mitigates any losses in your portfolio, because some things are completely unavoidable, right? Like we can't avoid when maybe a flood happens or something like that. There's things we can do, but how do you deal with it? And today I am the victim of the Tales from the Trench. Many times we have other people come out. This is my own personal story this time. So this episode is episode 11, Pick Your Partner Wisely. It's very important, and we all know this, and sometimes it can still happen. You think you're picking a good partner, and stuff changes over the years, right? So some of you might recognize this building. We've talked about it before. It's actually been the feature on a Tales from the Trenches in the past. This is Edge 3 in Maple Ridge. This is a condo project that our team had access to. We sold many units into it, including to myself. I bought one with Kelly and the team, and I bought another additional one, a one-bedroom and den, with a partner of mine. Now, this partner is somebody that, I don't know how many of you guys heard of the app Clubhouse. In 2020, this app became super popular during when everyone was locked in. It was an audio-only app where you'd go into these rooms, have chats, and you'd meet people. Well, I jumped into a ton of real estate chats. Like, I was meeting people from across US, Canada, built a huge network of investors and realtors and all this stuff. And in fact, I even flew to Toronto and had a big meetup party with like 30 of them where we got together because we were all chatting and we never met each other in person. Well, I got to know one person really well, and as we were talking about this project, she just became an agent. She was really excited. She wanted to learn investing, and we decided I was going to probably buy one on my own. And she said, well, I want to come in on a deal. And I thought, well, hey, why not? You know, we've become friends, whatever. We do a JV, 50-50, everything. So 50% deposit each, so we both have skin in the game. We'll split the profits 50-50 if we make profits. And of course, what nobody likes to hear is that also includes 50% of any losses that potentially could happen. Well, that's one of the biggest things that kind of caused a situation to go down. We bought this in 2021, and during the time the market had actually gone up, and so we were seeing units being sold later for a significantly higher price, which was awesome. We're like, yes, property values are up, we're gonna be in the money. And then for those who remember that Tales from the Trench, we had Dave Webster, who's the marketing manager for McLean Homes, come out, talk about when this building literally burnt to the ground. So what happens when a building burns to the ground? It delays the entire project, right? So they were at the point where the building was, they had all the siding was going up, like just the plywood, the roof was on, they were just starting to put windows in, but there was no fire doors, there was no sprinklers, there was none of that because they weren't at that stage. And according to him, he believes that the fire started from the other side of the fence, as he says it. So something happened, somewhere, shape or form, the building caught fire. And because it's just a big dry tinder box, the thing went up in flames. It took with it 2 other houses and the building behind it, which was also built by McLean Homes, and it was a devastating fire. So what that caused for us is longer time in the market. And what happened in that longer time? 14 interest rate rises, I think, 10 or 14, I can't remember. A lot of interest rate rises, 10. So a lot of interest rate rises, market inventory start to climb, things not going well. And had we been able to get out early enough, we would have made a decent profit on this. In fact, I still have clients who've made decent profits on this even in the summertime selling their assignments. But that's where the story really kicks up. I have a lot of clients who bought units, and I'm selling one of my own. Now, I can't represent myself. I have an agent representing me, and I know when I think it's a good time to drop a price. So I try to get the price dropped, and then so I tell my realtor, hopefully my JV partner will be quick on the draw, we'll get this property down, and then we'll get it sold, and then the other units will follow suit, and we'll get everyone sold. Well, this is what started happening. This is what the conversation started turning into. Hey, this is June 17th. Now this is also, we've been on the market for a couple of months. Hope you're having a good spring. Just want to chat about Edge 3 again when you have a minute. I think we need to do a bit of an adjustment on the price soon. I don't think we need much. Some other units have dropped below 450 and are now getting offers. I think 6K drop will really help move things along. Hey, thank you, right back at you for sure. I'll message you when I finish at the clinic. So if you're free, we can hop on a call. Okay, that was the 17th. 20th. Hey, I think you forgot about me, eh? Again, 24th, 4 days later. Hey, T, hoping to connect. We have to chat when you have 2 minutes. So this started dragging out. Now, in this time when, this is now over a week, other units have already dropped their price. In fact, some of them are listings that we had because I'm also going to recommend that to my clients because I have their best interest at heart too, that I want to get theirs sold. So now here I am, everyone else is reducing their price and we're staying at the top of the price. So when a buyer is looking at this building, which ones are they going to pick when you have 3 identical units on the market? The cheapest, right?
I just want to say that Cameron and I start competing with each other too, because I have a bunch of clients too. So I'm like, I don't understand Cameron, so I start slashing mine.
Because I want my clients to be sold before hers.
We had the first entry point, so our clients got the lowest prices. So our assignment prices online are lower than the
And they're still making a profit at this point. We're talking like about 20 to 25% returns on their money still.
But our best
So
sale was like 470.
yeah,
That's where they were selling.
at the time, yeah. Okay, this continues. Hey, so we finally got her to respond. So my agent sent the documents to do the price. Hey, check your email again. Docs were reshared with you. Yo, I know it's your B-Day. I hope you're getting these docs signed. Like, this was sent days ago. This happened several times too, where she would finally respond and say, yes, let's drop the price. And the agent would send it. And then after so many days, well, you can't use that paperwork anymore because the date signed is not going to match the date that it was written. And there's too much of a gap. So we're going to need to go and rewrite that paperwork. So we're constantly doing this back and forth of like, hey, why haven't you signed? Oh, yeah, sorry, I've been really busy. Great, we're all busy. Haha, Mr. Manning, I swear I didn't get an email yet. I checked both. She gives me both her emails. Trust me, this old mama needs a condo to sell. Forget birthday. Even if it was my wedding day, I'd sign the documents. Okay. So I'm like, have you checked your junk? She's used the same emails before. Then the next day, good morning. Did you check your junk mail? I've given your other email to try to send. She just tried your other email now. See if it came through. Like, it's like a constant trying to poke to see if we can get this done. This is now already August 15. Now keep in mind, watch these dates very carefully, okay? Because it's going to go back to what I just mentioned. Now we're August 15th. Hey T, things are getting a bit close for my liking because now the developer's calling with updates saying, we're going to be starting to do deficiency walkthroughs pretty soon. Hey, do you have your lawyer picked yet? We're going to need to have that on file. What's going on? So the inventory is growing and sales are still down, so we need to drop this price a bit more to make something happen. At this point, we just need out. I've instructed blank to reduce at least another 5K to see if that makes it happen. Kelly snapped this today because she was driving by the site so I could show that it's almost done. Okay, that was the 15th. Nothing. September 16th. Hello? Okay, September 17th. Tanaz, are you alive? Here is the important part here. If you look at the dates that we talked about, this is one of the sales that we had. We had it listed at $549. We were actually listed at $549 as well. This one reduced their price on June 27th to $447. It got an offer in July, got an offer, and then sold by August. So it happened within a month that price got reduced, it got an offer, sold only $2,000 below its price. So it did very well. However, these people actually are walking away with a profit. However, because we took so long, it got to the point where suddenly the partnership, that's where it really started to collapse. You know, people started blaming other people, aka me, on, you know, that this is the worst investment they've ever done. I keep having to ask for price reductions. I said, well, yes, if we just adjusted in time, we would have been the one with that offer. We would have made about $12,000 at that point on top of our deposits back. That is about a 22% return on the money when I calculated it. Not bad. She goes, well, that's not enough money. I wanted more. So I moved to text messages now. I'm like, hey, are you getting my WhatsApp messages? Hey, how are you? No WhatsApp messages. Screenshot. Been trying for days. Are you available to sign and resend the docs? The building's getting close to finishing. This is now September 20th, okay? We need to get this gone. Weird. No messages on my end. I don't know what to say. How did this go so south? Can you please send me the listing itself whenever it's posted? I'm like, strange. Okay, I'll tell so-and-so to send the docs again. Please watch your emails. Okay, and don't forget the link. Here's the link. Then, you know, we go on. I appreciate your concern. The market's hasn't been favorable for Simon's, blah, blah, blah. And, you know, sorry, I was sick. I couldn't sign. That's now the 22nd, so 2 more days. And then finally, it goes like 3 more days, and I had my moment. I snapped. I'd appreciate some communication back here. I've heard you out on your concerns, but the lack of communication since the beginning is getting to me. I respond immediately when you text. You said you had wanted a mature conversation, and part of that includes communicating, even via text messages. My concern is the developer is getting very close to completion of this project. They are now on my ass about providing the lawyer for our closing. If do not, you can tell we're getting frustrated. If we do not get this sold fast, we are chancing 100% of our deposit. Because by now I'm suggesting a reduction that will actually mean we're going to lose. At the time, it was going to be about $1,000. So 500 split between 50-50, right? I, for one, am not willing to lose 100% of when we have a chance to preserve capital, but we need to be moving faster on decisions, and part of that is open communication. Please reply and let me know if you're free to have a discussion around 3 p.m. Pacific, or alternatively, some other times that are more convenient for you. Thanks, and let's get this finished. Well, that was the straw that broke the camel's back. And unfortunately, she decided to now say, I don't like you, I don't like your realtor, and most of the decisions are mine. I want my realtor involved. I want my realtor to do all the work doing the sales. So I said, okay, I'm willing to hear you out on that, right? Which realtor do you want to use? She names the realtor. I look at the realtor's statistics. I know the realtor because I also trained her. And I go, okay, so she sold 2 condos this entire year. To me, that's not really giving me confidence when I'm a top 1% agent and we're going to hire someone that's barely making ends meet. I was going to get there. So the next thing is we have the meeting. I say to the agent, I say, not that I want to be rude, I said, but how many assignments have you sold? She goes, well, I sold a pre-sale once. Great, that's not an assignment. I said, have you done an assignment? She goes, well, it's not like it takes a PhD to sell real estate in Canada. And I go, actually, assignments are very complicated. I am always correcting realtors' like paperwork that come into us. Like my worst one I ever had 67 corrections on it. Like I remember because it was painful to make sure I caught all the initials. So I said, no, they're actually quite complicated. They're not that easy. And this is where, typically what happens in these situations is this is what we call a JV divorce. At this point, it's no longer amicable because she will not go down the path of like, I'm only using my agent. I don't want anyone else because I'm friends with her. I go, friends don't make sales happen. So I say, you know what? If that's the case, I want my own representation as well. We'll scrap the other agent. She understands. I'm going to bring in one of my guys. My guy is a top 1% agent who does we looked up his stats. He does about 160 transactions a year. So I'm like, that's the kind of guy. And plus, he's also done 3 of these sales for us in the last 2 months, including my other unit that Kelly and I had. So he's already familiar with this project, this paperwork, everything. She goes, nope, I'm not letting him get involved. I say, you don't have a choice because I'm not going to sign with the other agent too. And I am now ready to walk away from my deposit. Got to play hardball, right? I don't want to lose $20-something thousand, 22 or something, but you got to play hardball. Finally, she relents. My agent gets all the paperwork done, does all the work, gets the sale. It's also with another very big Maple Ridge agent because they've got a relationship. We get the property sold, but it took a lot of negotiating back and forth, and we are taking a loss on it now. We are getting some of our capital. I had to agree to take a larger sum of the loss because she wouldn't sign the contract that we finally got unless I took the brunt of it from the list price down. But it gets it sold. We move on because at the end of the day, losing the deposit would suck. But what happens in BC is if you don't close on your pre-sale, you have the chance of losing the deposit, but there's also the chance that you could get sued if the developer sells for anything less than the deposit doesn't cover those losses. Now in this case, because of our relationship with the developer and because of when we got in, I didn't think that was going to happen. However, I didn't want to risk it because you never know in this market. It's better to get out, get some capital, and move on. So that is this month's Tales from the Trenches. No. Oh yeah, she stopped being my friend because I didn't want to hire her, but it is what it is. This business is fickle sometimes.
You been 50% of her sales that year.
Actually, I was at least a third of her sales. And the funny thing is, I'm seeing her Instagram. She's posting all about how she did such a great job. All the people who inquired about the property, it's gone now, I go, we had one inquiry. And it was from my agent's side, because I also know that other agent because I've done deals with him too. So anyways, that's the Tales from the Trenches. So it's very important, pick your partners wisely. And sometimes it's just gonna happen where you're gonna be good at the beginning, but when things go south in the market, that's when their true colors come out, right? And literally, my agent's favorite line in an email that she got was, I thought you're supposed to be the #1 investment realtor in Vancouver. How could we be losing money? I go, did you not see that timeline? That's why. All right, that's enough about Tales from the Trenches. We're going to bring up our keynote speaker today. And again, if you've been having fun, you've been enjoying this, take photos, Post it online at Kelly Fry Team, Facebook and Instagram. And without further ado, we're going to bring up Keaton. Keaton is the managing broker of Greater Vancouver Tenant and Property Management. He has experience in managing a $1 billion portfolio across British Columbia and is currently managing over $330 million in assets. Yes, there are still people buying and renting properties here in BC. And he's got a 99.9% collection rate. With property management and real estate was in his family before his existence was a concept. And what I really like what he sent me in his bio was that he strongly believes rent control created a housing crisis. So without further ado, Keaton, welcome to our stage, my friend. I'm going to give you that. I'm going to grab you the mic. And let's turn that one on. There we go. It's all yours.
Same ones my video guy uses. Very familiar.
Yeah,
right.
There we go. If you haven't followed this guy on TikTok, check him out.
Giddy up. So is this how that works? All right, fantastic. Well, thanks, Cam and the team, having me down here. Now that I've had my glass of wine and some political touches, I'm sure this will be a lot of fun. That's the logo, contact cards on there. I got some business cards to pass out later, but I'm not hard to find. If you Google my name, just Google Keaton Property Manager and we'll come up. A little bit about the company. Cam already covered half of it. So we provide licensed third-party residential rental management throughout Greater Vancouver. We're only doing single dwelling properties. These are detached houses, townhomes, condos. We're not doing any buildings. We'll do some multiplexes and that kind of stuff when they start coming to the market. We've rented over 400 homes since we started the company 6.5 years ago, over almost $340 million in assessed value. Rented 107 homes the last 12 months. I like keeping track of our data, so it's 107, a weird number, that's just true. It's about 2 to 3 a week, every week of the year. So we're moving a lot of product. Almost $500,000 in rent per month. We're over $14 million now since we started the company, and that's over 99.9% rent collection rate. So very, very, very stable rent payments in the portfolio. We've got a team of 7. We got over 600 Google reviews at 4.6 stars, spread out between 2 business units for a property management company. That's the magic of how we keep growing our business. And the other one is we do not hold a trading license. We cannot buy or sell. The only property I've ever bought in my life is the one that I live in, and I hired a realtor to do it. So we're good friends with realtors. We take care of you and your clients without stealing them from you. Disclaimer, nerdy stuff. This is not professional advice, legal advice. These are not providing any services to you. Cam already knows that because he's a pro, but for anybody who's not, don't take anything. If you do anything that I say today, that's at your own risk, unless we're signed up, and I'm not trying to get you to sign up with me right now. Just let you know. Can't sue me for it. So we've got market update. The formatting's all over the place here. So we're going to walk through a rental market update, notice periods for buyers and landlords, factors to consider if you're selling a tenanted property, a little bit about the new portal, a little bit about our services, and then an AMA, ask me anything at the end. Literally anything. That makes it more fun. It's getting late here. Market update. So a lot of how the Vancouver market works is you read the Daily Hive or something and they reference the Zumper rental report or the rentals.ca report, okay? I wish we had the MLS for rentals. You can put a rental on the MLS, but nobody uses it, so the data there sucks. The data for rentals in Greater Vancouver is just private. If you have a lease or a portfolio, you have that information. CMHC does get some stuff in their annual reports they release every June or July every year. The vast majority of that is purpose-built rental, which is vastly very old, doesn't turn over very often, has an incredibly low rental rate. They've been starting to grab data from the individual condo owners, individual homeowners. They used to call us when I was at Gateway prior, where I ran that large portfolio. I've never received a phone call, and I'm pretty loud, and I deal directly with people at CMHC. They've never called me for our stats, so I don't know where they're getting their condo stats. So anyways, the main point here is that Zumper and rentals.ca, these are asking rents. And how asking rents are determined generally, if you were to sell your home, I would hope that you would use a realtor. Most people do. If you were to rent your home, most people do not use an agent or a professional. They do it themselves. So where do they get their information? Well, they get it from here. Okay. But then where do the people that put the information on here get that information? Well, they get them from here. And so these numbers don't actually line up with the reality on the ground. And you also have to remember, when Cam walks in the room with a buyer, I hope they're pre-qualified. We're the ones that do the screening, or you as the landlord. You're the one that does the underwriting. Forget screening. This is the underwriting of the tenant. You're doing the underwriting for the financial qualifications of this person. The bank doesn't care. Right? The landlord is the person who has the loan. They don't care what your underwriting is like. So what we find is that a lot of these rates are, depending on the market, higher or lower than what's actually going on. And you'll see here, so I did some screenshots from the latest October numbers. So we got year-over-year drops. Rentals.ca, 9.1, 9.4, 8.7. This is Burnaby, Vancouver, and Toronto. Who cares? Burnaby and Vancouver here, Zumper, 5 and 4%. So the numbers vary quite significantly. This would never show up in the MLS because it's one source of data. Okay, so it's very scattered already. You have 5% swing just in the two main sources of information. So you don't really have the information is the main problem. Second thing is that I found that these are more like landlord sentiment indicators. If these numbers seem a little bit crazy to you, like, oh wow, that's a much higher number than I expected, it's because it is too high. And it's because people are reading the news, putting stuff up, and usually what I've seen really in Burnaby quite a bit last quarter, or last year, at the end of the year, in the last quarter, we had a ton of pre-sale completions, tons and tons and tons. Peak interest rates, and Daily Hive just finished pushing this article around that was average rent in Vancouver is $3,000 a month for one bedroom. Not correct. But that's what one-time, first-time landlords are entering the market with. So what did Burnaby do? 17% year-over-year rents. We did not see that. We got some nice rents because everybody else was posted at ridiculous rates. So we know the market is here. Everyone else is asking here, so we're going to plant you here. On the market, gone. Perfect. But these reports are only more of a sentiment index. It's not market rents. Okay. Secondly, this is some back-end data that we get directly from a company that we use to syndicate our listings. These are the numbers here for total listings in 2022 in November. See, they're all these colors down here. These are different types, so 1s, 2s, 3s, and 4s. And then this is today, all the way over here in October. We've slanted very aggressively upwards. So we got 1,000 over the start, and then 2 years later we got 2,500 listings. This is in the city of Vancouver by itself, just Vancouver proper. So rental listings have gone up about 150% consistently over the last 2 years. So about the STR, the short-term rental comments you were talking about earlier, that's not, that's not because of this. Actually, the STR spike is right here. Very minimal. It's like 70 listings or something. Because most people are still sold and they move back in. These are some just anecdotal stuff from our portfolio. These are units we've turned over 2 or 3 times, just so you can kind of see the ebb and flow of the market. So this is East Vancouver, a 3-bed. It was brand new. We rented it April 2022 for $3,400. It was on the market for over 80 days because they caught it in July this year, which is when the market started to go down. And we were heading into August, which is generally the best time of year to rent a 3-bedroom anything. So we put them up at $39.95, which we expected based on other rentals that we had rented recently. They rented in November. It was on the market late July for $34.95, $100 a month more, right? In New Westminster, Nelson's Court, we rented it brand new September 2020 at $2,300, and then a year later at $2,300, which was kind of the crappy time in COVID, definitely. And then in October recently at $2,750. So this owner got pretty pissed because we rented it first. She was okay with that. The second time it was a crappy market, and then when we rented again in October this year, it was a crappy market again. She's like, I really like you and trust you, but every time I go to rent the place with you guys, it's a crappy market. Sorry, that's just yours, unfortunately. Out in Richmond, this is a 2-bed. June 2022, 2,500. February this year, 2,600. September, because the tenant broke the lease again, 2,600. So not a lot of room, not a lot of movement there. This 3-bed in Burnaby is a huge pain in our ass. So September 2022, $3,000. July 2024, 3,200, went up a little bit. Tenant immediately broke their lease. We could only re-rent it again for $2,900, so it's $100 down from September 2022. And in general, we're finding that the rental market is trading at about October 2022 prices. That's today. So we've lost 2 years. And then in East Vancouver here, so we got November 2022, we're at 2,800. It's another 2-bed. August 2023, which is like peak market. It's an older unit, so it's just over $3,000, and then we just rented it again for $3,000 again. So not a lot of movement there either.
But Keaton, everyone says rents go up like crazy over here.
They don't anymore. I'm sure we'll get into some questions there. On to the rules stuff. So into the rules stuff. So July 3rd, the province announced that it was July 18th. The 4-month notice to end tenancy is taking place. They rolled that out, and then August 21st, they realized buyers are totally screwed on that, so they dialed that one back to 3 months. They didn't touch compensation, so if you're going to move back into the property or if a buyer is going to buy your tenanted property, the compensation is still 1 month's rent. When you're buying a property, people say, well, who pays for the 1 month's rent? Ask your lawyer. It's just part of the deal. Sometimes they forget. But just make sure if you're selling a property or buying it. Same with the deposit. People forget that stuff as well. You do require a submission to the residential tenancy branch portal to get a notice now. So before this came out, you would just go online, download the notice, fill it out, however you want, deliver it. Done. Now you have to go to a portal, which is very hard to find, and we'll touch on that in a second. Once you get there, you have to go through and fill out all this information. The information, it's basically if you ever filed a residential tenancy branch dispute, that's what it looks like. The same portal, same layout, and all that kind of stuff. The information that they're requiring of you is quite a bit different, though. Like the buyer's date of birth, for example, is on there, and we'll walk through that. The owner or buyer, so if you're owning the property, you're moving it in yourself, or if the buyer's moving in, the notice has to be issued in good faith, and the use has to be for 12 months, as stated on the form. People think, that's fine, I'm going to move in for 12 months, and then I'm going to re-rent it, because this market sucks, I want to get rid of this crappy tenant. If you live there for 15 months, and that was your intention from the start, it's a bad faith eviction. You have to cross both of those thresholds. And people are like, well, how is anyone going to find that out? Well, people don't think over long periods of time. And they're going to go, you know what, I'm going to test the rental market now that I've been living back here for 9 months. You're going to put an ad up for a month and then take it down and kind of strategize. If your tenants have a Google alert on your address, that's evidence. And you're probably screwed for 12 months of rent. They will dig into it. The really, I don't like getting political, but the really scary part about this is we live in Canada. You are innocent until proven guilty, unless you're a landlord in this situation. If your tenant files a claim against you for a bad faith eviction, it is the landlord's obligation to prove their case that it was a good faith eviction. So whenever people are doing this, even if it's for totally legitimate purposes, we say, here is the tenancy lawyer that we suggest. Pay them the $300 or $500 and sit with them for an hour or two and tell them your story and make sure that they can tell you how to properly defend that or what absolutely not to do in this period of time that you're living there. Just to make sure if it is disputed, it's okay, or should be okay. There's a longer dispute period now, so you issue the notice instead of 2 weeks. The tenant has 30 days to dispute now too. It's just more time for what? I don't know. They have to move anyways. This is a fun thing that's now been coming up lately. So if you're selling a tenanted property, ideally it's not tenanted. Of course. Why is that important? Until this new legislation came out, it was fine, buy the property, give the notice, move it along. But now with the 3 or 4 months, cash for keys is becoming more of a of a consideration. I made a little calculator here on Google Sheets just to help you kind of understand. You can punch in a couple of the factors there and it'll give you a reasonable offer. When I say a reasonable offer, you can only reason with somebody who is reasonable. You may have an unreasonable person, and they're just always unreasonable, fair enough. You can, because of the rental market and because of rent control, so you've had a tenant in there for 6, 7, 8 years, and they're significantly below market rent. If you're telling them they have to move, they're going to become unreasonable. Right? If you were all reasonable people and I took you to my 15th story balcony and we had a beer on the balcony and you're like, yeah, this is a good time. And then I picked you up and hung you over the balcony, you become pretty unreasonable pretty quickly. They feel the same, right? So a negotiation based on this calculation is not going to work. A 12-month penalty sometimes is worth it if you're running your numbers. So you just want to consider that. So yeah, a mutual agreement to end tenancy is always an available option. So if you're going to sell a property, you could try to have that conversation. An agreed mutual agreement is good. As I just said, reasonable tenants will accept a reasonable cash offer. This is also a presentation for realtors, so look at HELOC options if you don't have the cash available. You want to consider the compensation on both sides of this. So I talked to a lot of real estate offices, and there's awesome realtors, and then there's who gave you a license realtors. The compensation from the landlord to the tenant is obviously money. The compensation from the tenant to the landlord is vacant possession. So do not give the tenant the money before they've left. And as one realtor did, do not lend your client the money and then give it to them before the tenant left. That's a good one. But yeah, you can scan the QR code there. If you can't get that one and need it later, it's on the form at this QR code as well. So if you're going to go to the market occupied, we made a checklist here with a lot of helpful links. It's just one page, kept it nice and tight like a good resume, and that will walk you or your realtor through selling a tenanted property properly. Following the steps and actually thinking about it through the perception of the tenant, because whether you like it or not, they are essentially your client at this point. You need to make sure that they are happy and satisfied and all of their cares and concerns are taken care of, or else you might have a bad situation. Main changes for sellers is that you have to understand that if you issue a notice, so there's a bit of a swing here with the dates and everything. If you issue a notice and your tenant is on a month-to-month lease, they can turn around and give you 10 days notice. They only have to pay the rent for those 10 days. If they've already paid the rent for the month, you have to give them back 20 days of rent, okay? They can go live on a couch or move back in with their parents or whatever they want to do. You still have to give them 1 month's compensation, even though they left early. And this is the best part. They're only leaving because you've already given them the notice, which means you've already removed subjects on your deal. And your deal is probably dated for 3 to 4 months down the road. So you've given them notice. They're like, I'm going to move back in with my mom. Thanks. Here's your 10 days notice. You give them back 20 days worth of rent, and then you have no rent for 3 months, and give them a month's rent. Everyone with me? Cool.
Hey, you could Airbnb it for
Yeah. So you just want to pay attention to that potential swing. It's not very common, but if there's been a realtor in there for a couple of months, they've already been thinking about it, right? Some of them aren't stupid. Portal walkthrough, we're not going to load this up. However, it is a little bit difficult to find. I haven't gone in here too often because we actually push this out to our selling clients now based on what the portal requires you to check off and affirm. But I've gone in to Google it because I don't have it bookmarked because we don't have to go in there that often, and it's taken me 3 Googles to get to this new portal that is, making headlines. So it is on our checklist, like the successfully selling tenant property checklist. You can Google RTB, and then it should be the RTB web use portal. It should be a nice green button, but it's a bit of a pain in the ass to find. If you Google 4-month notice and that kind of stuff, you're not going to find it. These are the things that the notice requires. So if you're the seller, you're the landlord, you're giving the notice to your tenant. You need to put the date of birth of the buyer on the notice. You need to put the number of adults and minors moving into the unit. You have to ask your buyer, hey, are you and the wife moving in? Like how many kids you have? That has to go on the notice. Same as the number of people moving out of the unit, adults and kids. You have to include the closing date as well as upload the purchase and sale, like the actual contract, to the RTB, and the buyer request form. So the buyer will generally send a form to the seller's agent to request that they issue notice to the tenant. The contract for sale used to be you have to send it to the tenant when you give the notice as well, which thankfully they dropped. But you have to upload all that information. So you have to make sure you're asking for that. I was in touch with the BCREA to make sure they changed their form, the request form, to include this information, even though it's a bit ridiculous. The big one is that the portal requires that whoever's filling it out, so usually the landlord, attests that this buyer is going to move in good faith for a period of 12 months. You're going to have, you should, if you have a decent realtor, you should have the buyer's request form with you, which on that form they attest. But you as the seller are telling the government that, yes, I know these people are going to move into this property and whatever, even though you might never even have met them if you're using realtors on both sides. It got to me a little bit when we started to fill this out on behalf of a client. We're like, we're not touching this because I'm going to deal with, I'm attesting that somebody who I will never met and have no relationship with at all is going to move into this property in good faith and for that period, and I don't want to go to that RTB hearing. So no, we're not doing it. So that's the new portal. Sweet. I wish I could give you better news today. This is how we can help. Here we go. We operate our company a little bit differently. We charge a one-time engagement fee of $500 for any services. We're going to do leasing or full service management. You do have to pay us in advance before we do any marketing. Reason being is there are a bunch of people in the market that don't understand what market rent is and don't listen to us even after multiple emails. So we're not going to waste our marketing dollars trying to rent your property and take care of you if you're not going to pay us first, because we're going to give our full 110%. It's very, very easy for me to accumulate 100 listings and just rent the ones that'll rent. Very easy. So we're not going to do that. You're going to pay us in advance. What we do is if you're full service management with us at 10%, there is no leasing fee forever. There's also only one engagement fee. After the first year, we don't put this on the website, but after the first year, if the property's done well and everything's fine, easy year, so 85% of our clients, just call us, we'll drop it to 8, and you can punch that into your spreadsheet, right? No leasing fees for life. If you just want us to rent the property out, we're doing the engagement fee, and then if you want us to do all the work for the leasing, the screening, the marketing, all that kind of stuff, it's $1,500, so $2,000 out of pocket. We will also do everything except for the physical showings, and you'll save $500. We schedule the showings, we do all the follow-ups, we train you, we give you an app, we fill the calendar, you just have to show up and meet Bob Barker or Vanna White. But it saves us time from not sending anybody out. It works really well for people who are renting out their basement suite, because what we found was it's also very weird that we're showing a property when the owners live upstairs. So the tenants really like it when the owners live right there, and then it saves us time too. So, and again, with any of the realtors, anyone who has realtors in the room, you better just be using the guys here. But anybody else, we do not have a trading license, so we're happy to work with you. That's it. How was the time there?
We're good, so we got definitely some time for questions.
Great.
All right, so we do have one that came in already online here. So Crypto Unleashed said, is there a particular asset class that's very easy to rent than others, i.e. condos in Burnaby versus houses in North Van?
We live in Greater Vancouver. Everything is easy to rent. People say, nah, my property's been on for 60 days, it's not going anywhere. We'll put it up for $1,000. Well, I'm not going to do that. Exactly. So it's not a matter of, demand, it's a matter of price. So there's that constant battle, and that is our job, is matching the greatest tenant with the landlord and their price, right?
No different than selling it. It comes down to price.
Exactly. The main thing that we look at if you're actually looking at buying an investment property is if you can buy a 2-bed, 1-bath, close to the SkyTrain or mass transit, and within your budget, of course, that's going to be the most boring right down the middle that rents to the most number of tenants, if you will. You got a small family, you got roommates, you got a single professional, you got a couple professional. No other asset class can really match up with that, in my opinion. In any market, if it's a super, super slow market, 15% vacancy, the 2-bed, 1-bath are going to rent most often. So that's what I would suggest. Talk to your mortgage broker. Make sure you make those payments. That's a big one too.
Yeah.
Yes.
Why would it be like a 1-bath versus a 2-bath?
So dollar per square foot. Check me on this. If you buy a 2-bed, 1-bath, or if you bought a 2-bed, 2-bath in the exact same building, exact same unit, everything, it's just got an extra bathroom, it's going to sell for more dollars per square foot.
That's correct.
So we're trying to use our capital efficiently, right?
And the renter doesn't.
It doesn't affect it that much, and the bonus is that you have 1 bathroom to renovate.
That part I understand.
Right? Somebody knows a good Tyler at the back of the room there. Yeah, so hopefully that answers the question, but yeah. Yes?
Just to build on that, great talk by the way, thanks. What's the typical same square footage, same building, the price difference between the 2/1 and the 2/2 for rent?
It's only going to be a couple $100 because you're going to find those groups that it's an affordability play at the same time, right?
But that's a couple hundred make the difference to get it.
Yeah, like if you run out a proper sheet and look at it, it's going to be like, oh, I'd way rather buy this other one. Factoring in repair and maintenance, renovations, risk, and then you have more when you open up more of that prospective tenant window. Then you just get more applications.
Opening up the window, all right.
Yeah. Same thing as when we almost aggressively encourage 1 pet up to 35 pounds for a multitude of reasons. Not for medium-term stuff like you're talking about before, but it's such a significant marketing advantage that you're literally leaving money on the table. And people come in with horror stories about pets. Fair enough. Okay, it's your property. Like I'm not going to fight you on it. But it is like math, right? So yeah.
Do you charge a pet fee on the long-term rentals for those dogs?
You're not allowed in BC. No. So the way you charge the pet fee is that you allow the pet, and then you get more applications, and the rent goes up a little bit, right? So.
And one last one, please. Do you mind sharing the company you use to syndicate your listing?
RentSync. Yeah. They've just turned on all the really cool data stuff because some people were like, you know what, I'm not really getting all my value. And like, hey, look at all this data we got. I'm like, okay, cool, I'll stay. Yeah.
All right, we got another one online here. Do you see fixed term ever coming back to RTB leases?
I mean, it exists, but we're on the West Coast. Like it's just that's a really big political thing. I don't know who to yell at to have them understand how a market works. So much rent control. Rent control is such a huge problem for so many reasons. It's very easy for the government to just go rent control everywhere, right? They just got to tell some lobbies to shut up and they just sign it, okay? There is no end to leases, for example. If you go to, apparently Alberta has changed since we talked recently, but when you deal with a normal market with a lease that actually ends, people are going to be looking around. And the manager, property manager, caretaker, whatever, if they haven't renewed that lease, they're posting it online. Adds a listing, right? Even though the person hasn't moved out yet. In a market of 3 to 5% vacancy, that means every 100 unit building has 3 to 5 units available. 3%, you got a 1, a 2, and a 3. So if you're moving out of a 1 or a 2 or a 3, you can look at the listing and be like, well, why are you asking me for a rent increase when that unit's listed for this? And then you look across the street at the other building who's got them for a little bit cheaper. That's how the market works when it's balanced. And all that's required of that is more inventory. Build it or tell people to stop coming, or a balance of the two. That's all they got to do.
Yep.
So whenever politicians understand, then they'll change it. But I don't think, I'm not a political scientist, but I assume that those two don't. Those are mutually exclusive scenarios. So that's really it. That's a long-winded way of saying no. Don't plan on it. Don't put it in your spreadsheet.
Yeah, I mean, at the end of the day, too, it doesn't bode well for politicians when they're trying to get revoted, right? Because the masses, they're looking at rent control as a good thing. The amount of comments I'm sure you get, on your socials, I know I get it. People are so in favor of it, not realizing it's screwing them in the long run. So
Yeah, and when the government's doing it as a lazy way of not actually knowing who they have to help, there's no checks and balances there.
Yeah.
We've got 115,000 homeless or at risk of homeless people in the province. We'll build them some homes, and then they'll move out of where they're at. And the people that want to afford cheaper places, they move down, and you just hollow out the market, and makes it more available, right? But they don't want to solve the problem, obviously. So, yeah.
Just want to enlighten me on this, to drill into this a little bit, because I'm not as nearly brushed up as you on the residential tenancy stuff.
Yeah.
The pet fee thing, like I always understood that if you charged like a separate pet fee or like a one-time pet cleaning fee or a parking fee, like say you're gonna rent for X and then charge for a parking stall,
Yeah.
or storage, right?
Yeah.
If you build it separately, it could potentially be subject to taxes, but it was doable.
So those are two different things. So you're allowed to charge for a parking spot or not. You're allowed to charge for a storage locker or not. You are not allowed to charge a fee, like a rent or a fee.
Like a monthly ongoing, but a one-time pet cleaning.
Deposit.
Okay, well, we
Yeah.
do that.
Yeah.
But also, like in our industry, midterm rentals, it's very common to have
Yeah.
like a one-time pet cleaning fee, depending on 2 dogs, 1 dog size.
Yeah, I just don't think anybody looks at it in your world though,
It's
so it
kinda
doesn't
rolled into
matter.
rent. Because
Yeah.
if you do it separately on an invoice, for example, then it could be subject to tax.
Yeah. So somebody pushed on it.
But I did just check on Google, it says
Yeah.
no in BC to pet fees.
Correct.
It's a monthly.
Yeah.
Interesting.
Yeah. Like even to we'll reach out to tenants at the 8-month mark to say, hey, are you sticking around? Actually, the email says, here's your rights. How much longer do you want to stay and how much you want to pay for rent? That's basically what it says. And we get responses like, hey, I want to stay. I don't want to pay any more rent. Cool. Super creative. But they will say, but we're thinking about getting a dog. And then I'm like, money. Here we go. So you are allowed to change the lease, right? So you can negotiate an above the maximum rent increase, as long as it's mutually agreed and still issued 3 months notice, right? There has to be some sort of reason as to why they do that. And what we've had success like 30% of the time on is the tenants agree to extend, they want housing securities, want to extend their lease, and they want that price locked in, but they ask us if they want a pet. And then we say, no. But it's about that time, so if you guys want to stay longer, yeah, okay, well, here's the rent, here's the duration, and we'll add the pet at the same time. It's not a pet fee, we're just changing the lease. And so that's like worked.
And I saw on your LinkedIn today, just checking you out, that those exceptions where people have, maybe your client didn't remember, but achieved like 20-30% rent increase as a one-off. Didn't they go way above the minimum rent increase?
Oh, that was a RTB decision.
Right.
That was a additional rent increase capital request, but it wasn't a capital request. It was for, literally the decision was sent to me on Facebook in like May, but it was just somebody taking pictures of something and it was just sectioned. And I searched some of the words in the photo and it didn't come up on the database, so that there's a delay to them posting it online. So, and then I just like forgot about it. And my social media guy, he boosted that post that I did on Instagram about it, like 3 months later. A broker in Kamloops called and said, hey, do you have the RTB file for the decision number? And I said, no, but I haven't looked it up in a while, so maybe it's there. And so I did a bunch of searches on the words and the phrases, and I found it, and the decision was dog shit, honestly. It was horrible. But the whole decision was that they gave the rent increase based on the fact that the owner's mortgage went up. And that was it. That was the only reason. It's like, well, there's no like allowance for that, and I get it. But like if I'm a cash investor, I can't file for this. Like what? It doesn't really line up. So they did get a 26 or 23.5% rent increase or something.
I heard a story like that.
Yeah. So I just said like the arbitrator didn't check with their manager kind of thing. And actually I broke the story and like Twitter went absolutely nuts. I had 405,000 views on that tweet. Like there's 5 million people in BC, right? I was like, that's pretty cool. And that same day, Ravi Kalan came out because I was interviewing with people all week about it. And he came out and he's like, we're going to change the regulations. And then there was a couple stories floating around where people applied for that and got rejected with a much better claim as well. So it's just a one-time thing. Green shirt had a question, but he left. Yes.
I was curious as to what your secret was to getting 600 Google reviews.
I worked in restaurants for 10 years. Reviews are good feedback.
How do you compel people to do it?
We give everyone a link. Everyone we deal with, we just give them a link. Tenants will complain about some timing about something, and we'll resolve the issue. Maybe give them a call. Hey, what's going on? Yeah, I'm just pissed off. Okay. They'll still get a link. They can mouth off online all they want. Actually, right now, I'm even getting a little bit more cocky about it because like we have like so many reviews. If we get a bad one, then I get to go in, investigate what actually happened, if it's our bad or just the tenant being unreasonable, and then respond, right? And if anybody's ever gone traveling and they're checking out a restaurant, you go on Google, check the reviews. I like to flip it to 1-star reviews and see if, like, does the restaurant suck or are these people just crazy? And then you read through, crazy, 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 great response, great response. You go out to dinner, have a great time, excellent restaurant, right? And so that's the perspective, but we don't filter them. We don't say, hey, how was your experience? And they say, great, and then we send them the link. There's none of that. It's just everybody gets one, and then we just tighten it up and do a good job. Yeah, and we get one new landlord inquiry every single day of the calendar year. We just hit 365 the other day. So that's no Google ads, nothing. And really loud on TikTok.
You got a question?
Green shirt, you left. Yeah.
I just had a question regarding your asking rent sentiment for Zumper and rentals on.
Yeah.
If that's kind of like the list price versus sold price for homes, is there any viable sold price equivalent for rents in the area, or is it just kind of having a market intel like you have?
It's just talking to property management companies.
So yeah, what you see and what you see on the news and everything, that's just kind of, like you said, it's the asking sentiment of landlords that's not as well.
Yeah, so the main reports are going to be the CMHC rental survey, which they do once a year, and then the Zumper and the rentals.ca reports. Zumper and rentals.ca are just ad platforms, and all they do is they put all the information of people putting an ad online, and they average it, median, and that's what they show.
Whether or not that actually is what the places get. Right?
Yeah, so like we're a customer, pay them thousands of dollars a month. They do not have our internal data and never asked for it. I had a beer with their CEO and their data guy when they were here for a conference. They don't care about that because it doesn't affect their business. It doesn't matter. Yeah, but yeah, the sold data is just internal to a property management company. We're trying to figure, and working with a software developer, trying to figure out like how we can get our real information to like realtors without giving away too much private information, whether it's area codes or whatever, just to kind of start that ball rolling. But yeah.
Do you use rentalmeter.com at all?
No, it's all just junk algorithms. Yeah, like I'm an advisor with another company who's trying to do that here, and they've worked all this time on an algorithm and AI and all this kind of stuff, and I've been feeding them data and stuff, and then I hit the button and I'm like, no, it just like doesn't, it's not good. Yeah, it needs like a proper MLS system. Like Toronto, that's what they do.
Mm-hmm.
Right? I go talk to agents in Toronto, and they're just like, "What do you mean?" And I was like, "This is," and they're like, "What?" And they're just flabbergasted. And I'm like, "Yeah," and they're like, "Okay, that's it." I'd way rather it be transparent because then I don't have to argue as much, right?
Yeah.
I mean, you still do with MLS,
Of course,
right?
of course. Pricing's always key, and not everyone can price. It's an art, not a science.
Yeah, yeah. It's easier for us because we'll have like 30 listings or something at a time. So if somebody, and it's a new client to us is worth less than a realtor, the way the business model works. So if a client's not listening to us after we've talked to them, advised them, gone back and forth, then they pay us $500, and then they argue with us 2 weeks later about the exact same conversation, we're like, you might be gone pretty soon. That's okay. We told you.
Yep.
My realtor referred you. Yeah, cool. Yes.
So these average prices are misleading. What would you say the actual rental prices are versus the so-called advertised prices?
Sorry, Keaton. We're
Yeah,
getting
yeah.
a few people just want you to repeat the questions back online.
Oh, sure. Okay, no problem. Yeah, because I guess I still got this mic. So what is the relation between the rentals report and the actual rents when people actually do it, right? So it's a bit of a complicated one because somebody who hasn't rented a property before and they don't actually do all the checks because they're worried about their mortgage payment will get those rents or higher sometimes. It's very easy, and we tell people this all the time. It's like, hey, your property's gonna rent for $2,500 a month. I'm like, I think it's gonna rent for $27,000. I was like, how about I rent it for $4,000? I'm like, what do you mean? I said, well, I can get any mouth breather, toss keys to their chest, and have them sign a lease for $4,000. But you have to check, and the people that make financially conservative decisions, who are actually gonna take care of your place and pay your rent, don't pay that amount. Do you want a stupid tenant that doesn't know the market, who hasn't paid attention and makes horrible financial decisions living in your place because they haven't looked at the market? Like, well, no. It's like intelligent people want stupid people to live in their places, but they don't at the same time. So that's like a fun thing to work with them on. Our rents are probably anywhere between 5 and 10% of those because we're renting to people who have a household take-home pay of 3 times the rent or more. They have a shortfall, we look at their savings, and then their credit, and then the court search, and then the reference, and then the income verification. Don't be an idiot, show up on time to your showing. But we don't ask things like, why are you moving? We don't ask things like, are these your kids or are they somebody else's kids? Or are you married to this person or your roommate? None of that matters. None of it matters.
How much time do you spend educating an owner versus just being like, okay, thanks for $500, see you later? How much do you spend beating your head against the wall for somebody?
Yeah, we don't
Yeah,
beat our heads against the wall ever.
Just repeat the question.
Oh yeah, thanks. Yeah. So how much time do we spend educating an owner on price and the market before we end up terminating them?
Yes.
Right?
Exactly.
So we're very clear at the start when somebody reaches out to us. We give them a bunch of information, but the main thing is like, how much my property are you going to rent for? Good, right? So we give them the suggested asking rent as the starting point. Yeah, it's the highest number, but it says suggested, and then in the write-up it says prepare for like a range of down 10% of this. What we found is that doesn't matter because whatever high number we put on there, everyone always wants more. And so we say, cool. We're happy to try for higher because it costs us less money to market your property for too much when we know it's not going to rent for that than it does for you sitting there paying strata fees, mortgage, insurance, vacancy insurance, which you don't even actually have because you didn't listen to us before about that either. So if a pipe busts, you're paying for it because your insurance broker is lazy, didn't actually get vacancy insurance for you because they don't want to sell it to you because it's too hard to go get. We'll tell them all that stuff. Then they'll pay us. Then we give them a marketing report every single week. This tells them the ratio between the saves and the opens on their Facebook Marketplace ad, even though we have ads in different places. So if you've got a Facebook Marketplace ad that has had 20 ad opens and 200 saves, it means people are just scrolling through the listings and hitting save, save. The picture looks kind of nice. The price is a little bit too high. They don't open it. And then you have clicks where people have actually opened it. right? And so a 10-to-1 ratio means it's too expensive. And that has been very, very consistent. But then we're also telling them only 3 people have registered for showings or have inquired about showings. And we won't even show a place until 15 to 20 people have inquired. Because we've done it constantly where it's like, hey, there's 10 people, let's do a showing. Nobody calls or nobody books, right? So we give them the weekly marketing report. It prompts them for advice on dropping the price. This is what you should consider. Here's my calendar to call. Here's my phone number to call. And you can reply to this email to ask us any questions. And they might just not, or might just be like upset about it. But they're the ones burning more than we are. And if they don't get it by 6 weeks, they're just wasting our time, because the biggest problem is that you've paid us $500, we're going to deliver for you, we're going to tell you. Even if you're not happy with the result, we're going to do the same that we're doing for everybody else. And if you're going to steal my time from my other clients who are doing everything that we told them to do, F you. Goodbye.
Okay, a couple more comments coming in from YouTube. Crypto Unleashed. I keep calling you that because that's what your handle's showing as. This is a masterclass in property management. Thanks, Keaton, for all the great tips.
All right.
Yeah, round of applause for sure. Vivian says, great insight, Keatons. Thanks. We've got a few other people. Great tips. Had several changes on our lease because the tenant wanted housing security and they know they're still below market rent. So they like that tip about getting in advance. So a few other comments there. We've got time for a couple more questions if anyone has it, either online, if you want to drop it.
Shout
in
out to
the
Yuri
chats.
if he's here. Shout out to Yuri if he's here.
Yuri's been watching, yeah,
All right,
absolutely. Yeah, he's here. And if anyone else has any other questions, feel free. We've got about a couple more minutes and we're good to go on that. No, clear as mud.
Good, yeah.
Craigslist versus Marketplace, what, any comments?
Yeah, so if you take the listing maps.
Sorry.
Sorry,
Craigslist
yep, sorry.
versus Facebook Marketplace.
Apologies.
Any tips on that?
My first meeting was at 6:30 a.m. this morning. I've had 2 glasses of wine. So what is the difference between Craigslist and Facebook Marketplace as far as, comments in general, right? So I took the maps. So you open up, Greater Vancouver map on Craigslist and just see like all listings, right? And then you do the same thing on Facebook Marketplace. The listings on the west side of Vancouver, the total number is much higher on Craigslist than it is on Facebook Marketplace. And then if you go to the valley, it's the opposite. So there's more listings on Facebook Marketplace in the valley than there are on Craigslist. So there's a little bit of a gradient as it moves across. That doesn't mean the users are higher, right? We have not used Craigslist for years at all. We'll test it when there's a bit of a dip or there's a more of a difficult property to rent and we're like not quite sure. Like we're like the market's telling us it's the price, but we don't believe that based on the information that we have. So we'll be like, we'll turn on Craigslist and we'll turn on a couple other things that we can try to do just to tell the client we're going to put in some extra effort here and try to get that done. Craigslist has never done anything for us. We tell clients if they want to post the ad on Craigslist, here's the photos, here's the ad, go ahead. This is the template email auto response you set up. This is how you do it. But whenever we post on Craigslist, it gets flagged or it's just kind of useless information. And so all we're doing is paying our team to like go set it up again, set it up again, set it up again, but it doesn't generate anything. So other clients do it because it makes them sleep better at night. They will get a ton of inquiries and like, great, nobody's booking. Anyone who's applied doesn't make any money and it just hasn't really resulted in anything. Facebook Marketplace, very similar, but we have rented a lot of places on Craigslist, on Facebook Marketplace. We get more leads. It's easier to track. There's a little bit of automation that we can do versus Craigslist, which is just like, I think they have like 16 employees at the company or something, and they don't really care.
They've never updated anything, ever.
Yeah. So we've gotten away from it entirely. People can use it if they want. Like, if you got one unit, if I had one unit, I'm putting it everywhere that I can because I want it to rent, right? But yeah, it just doesn't make sense for us to use it. So yeah,
Okay.
Good question. Yeah.
Excellent. All right, we got time for one more question. If anyone has a question, again, if you're online, feel free to throw it in the chat. No? All right.
Yes, it is my real hair.
Appreciate it, Keaton. Thanks for coming out.
Thanks a lot.
That was awesome. All right, I'll grab that. Thank you. I mean, I learned a lot, and I mean, you know, Kelly and I, we deal with obviously tenanted properties and selling tenant-occupied properties, and I even learned something new. So that's why we bring out people like Keaton to come out and teach us these things, because, you know, while I'm in the trenches every single day doing buying and selling and dealing with tenant-occupied properties on that side, he's in the trenches every single day dealing with tenants and renting units and, you know, handling homeowners and questions and everything like that on that end. So definitely we love bringing out speakers that can bring these perspectives to you guys. So thank you again, Keaton. All right, we do have a hot deal, and again, like I said, this one came in literally, it was actually last night, but we got clarification on some things today, so we're gonna bring it up for you guys today. This is a project called Caleb Abbotsford Condos out in Abbotsford. It's a 1 to 2 bedroom condo development by Whitetail Homes in Abbotsford. Typical of Whitetail Homes, you've heard of them before if you're a regular here, we've dealt with them before. Modern and warm interiors, they've got a rooftop and spacious outdoor lounge, just a few minutes drive from schools, parks, transit, and more. What's interesting is this year they are doing a guaranteed rent program. I'm not gonna go into too detail with that. I did ask for them what their guaranteed rent program looks like, and they're gonna get us numbers on what those are gonna be per unit in the next coming days. So I was hoping that I could do a cash flow analysis to see if these even cash flowed with that guaranteed rent program. But they are offering obviously full rental management by a licensed property manager, rent paid on time, no property management fees, blah, blah, blah. Guaranteed rent programs, yep.
Although the last time they did that, they came to us to figure out all the math.
It's true, actually, we ended up, our client's guaranteed rent ended up being on average $300 to $400 higher than what the general public's guaranteed rent program got, because we said we're not going to sell it unless ours match what we think it should be to cash flow. And so our clients all got higher than everyone else who walked in off the street or brought their realtor. So keep that in mind. So we're waiting on that, and then we're going to dissect it and throw it back at them. So prices are starting for 1 bedroom, 1 bath at $350,000, ranging up to $604,900 for a 2-bed, 2-bath. $1,000 assignments, 5% now and 5% by the end of May 2025. Estimated completion is the 2027. I think it's supposed to be spring 2027. So that is the hot deal of the month. If you guys would like more information, we have price lists, we have floor plans, we have everything like that. Just give us an email and we'll make sure that you guys get all that info. This is where the project is located. So you're not too far south off of Fraser Way. You've got Mill Lake Park right here. So it's a really nice area. I know you're familiar with Mill Lake Park area. You've got Mahogany. Is he there? Nope. See right here, Caleb, right on Parentonville. Kelly? Yeah, going to public November 30th. So we've got about 2 weeks on this. All right, and that's going to wrap things up for us tonight. Flip out your phones. We do have some QR codes if you want to scan some things. We actually have a lot of QR codes coming up, so I'm going to pause each time. But obviously, if you'd like to follow us on social media, you can find all of our socials right here. That's Facebook, YouTube, Instagram, TikTok, everything like that. So scan that one there. And of course, if you'd like to watch a replay, if there's something that one of the speakers said tonight that you're like, I really wish I had an opportunity to rewatch that, well, you can. If you guys go to youtube.com/Cameron Manning and subscribe to the content here, you'll be able to watch a full replay there, so you can scan that and check it out. All of our past events are in the live tab as well, so you can go back to any event, watch them all, and grab that content. What did Keaton say about that strategy for getting them to, maybe like if they're going to ask for pets, maybe we can, it's all on the replays, so you can check that out. I'll pause, I see phones out, okay. And obviously, like I said, we are working on Movember. I'm working on Movember. We've raised $730 so far this month. Our target is $3,000. We are doing half of all the door fees that we raised tonight. And of course, if you'd like to help us out and raise more money, feel free to scan that and donate to the cause. And I will continue against Kelly's, wishes. Look at her face, I'm sorry. To grow this stunning stash out for you guys. And keep posted on my social media. You guys are gonna see this thing as it grows out. Like I said, that was last year's face. Definitely different this year. And we have relaunched the Manning Up on Real Estate podcast. We have had several new episodes, so you can listen on that with that on Spotify, Apple Podcasts. We've also recently launched on YouTube podcasts now, and with that comes a new YouTube channel as well, where you're actually going to be able to see the videos behind the audio. So if you'd like to listen to the audio, you're driving, you have that option. You also have the option to now sit down and watch the podcast. And what I'm doing right now is kind of a two different style podcasts in it. One, we're going to be bringing back interviews, which is wildly popular. A lot of people love those episodes. But also weekly, I've been doing a Manning Up After Dark series where it's literally me talking to you guys, but I'm also bringing up, like we did a full market analysis on the last one. So we brought up all the slides that you saw here. We really dove deep onto the numbers. We talked about elections and things like that. We talked about interest rates. So we're really diving deep into weekly news on this and what you need to know. And again, so you can watch it with a new channel. Help me grow that one. We just launched it about a month ago. We're about 21 subscribers right now, so I would like to see that go up. And the more that goes up, the more it tells me you guys are liking the content we're putting out there for you. And then lastly, because we don't have a meeting next month, we have our Christmas party. And we are so excited. You know what I'm more excited about? Mike, Manuela? We're doing an ugly sweater contest. Well, because I know you would love that, I'm sure. Oh, yeah. We had to convince Kelly to do that because she's like, no ugly sweaters. We're like, no, people love that. All right, so Christmas party is going to be here in this room. It's going to be December 1st. It's a Sunday, 2 to 5 p.m. You're all invited. We'd love to have you guys out. It's an annual thing that we do every year in lieu of doing an investors performance group. And of course, it's widely for all of our clients, not just investors. This year, our sponsors so far are, our platinum sponsor is Garton & Harris Lawyers. And we've got gold sponsors, including ThunderClean, Svetlana from TD, and TGL Group, Chartered Accountants. They're helping make this possible for you guys. And we're going to have, of course, food, we're gonna have music, we're gonna have games for kids. Bring your children along, of course, because there will be a special somebody coming down from the North Pole to visit the kids as well. So ugly sweaters and a special visit from some big red jolly guy. And of course, we do have our Facebook community as well. This is the best place to stay up to date with what's going on in the real estate market. And of course, when we're doing different events. So make sure you join our Facebook community. We are actively growing, which has been awesome to see. And of course, you can join us on meetup.com as well. Those two are the two best places to be kept up to date for future meetings. And honestly, with that being said, we'll see you next year. Thank you. And if you've been watching online, we really appreciate you guys tuning in online. There was an amazing number of you guys this week. Don't forget, while you're watching online, hit that subscribe button, like this video, and of course, we will see you guys next year. And I would recommend coming out to our Christmas party. So thanks again. We'll see you next time.